Hi everyone, I'm Shawn Severson, CEO and Head of Market and Thematic Research at Water Tower Research. Welcome to the very first edition of our Small Cap Strategy Weekly, summarizing the week ending July 24th. Before I get into the 5 things that drove the week, let me start where it counts, with what to actually do with it. There are 3 reads to carry into the week. First, our read stays up the ladder, with the profitable self-funding end of the small cap market. This week the sort by quality was clean and actually steepened, and the money is now pointing the same way. Second, here's the new wrinkle. We would express that quality tilt through energy and the power build out now, rather than the rate-sensitive value pocket, the banks and real estate names that led into it. And third, don't let the rate move scare you out of quality. A 10-year yield in the high 4s puts the profitable names on watch, not under strain, and they don't really feel it until rates are sustained closer to 5%. The one thing that would change our mind is that level holding while breadth rolls over. And as long as the smallest names keep coming to market for dilutive cash, we don't want to be early down the ladder. Okay, here's the why behind all of it, the 5 things that drove the week. Number 1, the quality ladder held, and this time it steepened. Sort the market by size, and the returns fell in almost a straight line, the largest tier near flat, and each step down giving back more, into about a 4% drop at the very bottom. Breadth did the exact same thing. In 1 week, the market paid for earnings and balance sheet quality and charged for the speculative end, only harder than the week before. Number 2, leadership rotated toward energy and power. Inside that quality bid, energy, materials, and the electrification names took over from the rate-sensitive value pocket that had been leading. Oceaneering re-rated 25% on a strong quarter, and the AI data center and crypto power names led the entire market. Cypher up 32, Riot up 23, HUD up 20. That build-out went from a thread beneath the tape to the leadership itself, which is why we read the rotation as durable, not a 1-week reshuffle. Number 3, the money confirmed the tilt. The broad Russell 2000 shed about $2.5 billion on the week and more than $7.5 billion for the year, while the profitable small cap and mid cap indexes kept drawing cash. For once, price and flows point the same way, up the quality stack. Number 4, at the bottom it was capital structure, not the economy. The week's worst names fell on dilutive raises, hiked spending, and downgrades. Codex is priced a $25 million stock deal and dropped 34%. Evolent got cut on a downgrade and fell 27%. And the smallest tiers are the soft spot. Only about a third of micro-cap names are anywhere near a 52-week high, and fewer than 1 in 10 of the very smallest. A burning balance sheet, not the macro, is the through line down there. Number 5, and this is the part we're watching into next week, the tripwires. On rates, the high 4s is a watch level, not a wall, and a sustained move toward 5% on real yields is what would make us wrong. On breadth, microcap participation climbing back above the halfway mark would tell us the broadening has real legs. And on the energy call, watch the longer dated oil curve, not the front month. A back end that lifts and holds above $80 would say this leadership change is structural, not just a supply scare. And before I let you go, a quick lightning round from our quick read. On the corners, the 5 things skipped. On style, value beat growth again and kept the breadth edge, with more of its names near their highs. On the deal front, it was busy, about 11 raises and $1.7 billion priced. But the real money went to 2 mid-sized profitable names, a $1.1 billion energy deal from Magnolia and a biotech follow-on from Dyne, while the microcap end came only for small dilutive amounts. And the headline transaction wasn't a raise at all. Safety Insurance drew a $1.5 billion all-cash buyout, a reminder that quality small caps are still takeout targets. That's the week, the read up top, and the 5 things behind it. I'm Shawn Severson with Water Tower Research. Thanks for listening, and I'll see you next week.